REITs have become an increasingly popular investment option for those seeking a steady stream of income, diversification, and exposure to the real estate market. Rising rates pushed prices of several well-run REITs lower and respectively their dividend yields higher. If you are looking for reliable dividends, now is the time to act. Real estate investment trusts are designed to pass income on to shareholders and that way compete with other income options. Rising interest rates have made things like CDs more attractive, which makes REITs less desirable to some investors. Higher interest rates make REITs lose value and put their balance sheet under pressure. That's because that is the main growth driver for REITs. Some investors are scared in this environment, but others, like me, use this opportunity to buy high-quality REITs at a discount. So, whether you're a seasoned investor or just getting started, stay tuned to discover some of the best REIT stocks that could help you achieve your goals. The number one on my list is the American Tower Corporation, ticker symbol AMT. This is a REIT that focuses on owning and leasing out communication infrastructure, including cell towers, rooftop antenna sites, and distributed antenna systems. As a leading player in the wireless communication infrastructure industry, American Tower benefits from the ongoing growth of the wireless communication sector, particularly as more customers and businesses shift to using mobile devices and wireless network for communication and data transmission. The company's business model involves leasing space on its communication infrastructure to wireless service providers, broadcasters, and other tenants, generating a steady stream of rental income. As of the end of 2023, American Tower had nearly 225,000 communication sites across the globe, including in the United States, Latin America, Africa, and Asia. Overall, AMT stock is considered a solid investment option for those seeking exposure to the growth potential of the wireless communication industry, as well as a reliable source of income through its consistent dividend payments. With a market cap of $90.64 billion, American Tower is the second largest REIT in the United States. Over the last year, the stock has been 10.5% down, but I think that this is only short-term volatility and nothing major has changed about the company. Since it went public in 2012, the company has increased its dividend every year and now has a dividend yield of 3.5%. The dividend is increased almost every quarter, and according to the last payment, which was paid this month, the annual dividend is $6.80 a share. Don't look at the payout ratio. It isn't right because this is a REIT and their payout ratio is calculated differently. The 5-year average dividend yield of the company is 2.16%, which suggests that the share price is undervalued given the current yield of 3.5%. The 5-year average dividend growth rate is 11.48%, which is amazing. Every company that has more than 10% 5-year average dividend growth rate deserves attention. Analysts have assigned the company a moderate buy rating, with an upside potential of 13.9% to $221.54 a share. They also projected 5% earning per share growth from $9.38 to $9.85 a share. The only concerning sign about the company that I can find is that insiders are selling the stock. In the last year, not even one insider has bought stocks, while 2 insiders sold shares worth just over $3 million. Out of the 3 companies I will discuss in this video, American Tower Corporation is the one in which I am currently investing the most money. I am particularly drawn to it due to its global diversification and growth prospects, and I believe it holds significant potential for future dividend growth. Next up is Realty Income Corporation, and no discussion of REITs would be complete without mentioning it. Realty Income is a real estate investment trust that specializes in investing in retail and commercial properties. It is known for its unique business model, which involves owning and leasing out properties to tenants under long-term leases with rent increases built in, earning it the nickname the Monthly Dividend Company due to its reliable and consistent monthly dividend payments to shareholders. The company has a strong track record of financial performance with steady revenue and earnings growth, as well as a solid balance sheet with manageable levels of debt. The company's portfolio currently consists of over 13,250 properties. It is well diversified across many industries, sectors, clients, and geographically. But I will leave this for a future in-depth video about Realty Income. The company has always maintained a high occupancy rate, which at the moment is 98.8%. No matter this, the share price is down 21.43% in the last year to $53.76 a share, which has driven the dividend yield up to 5.83%. Like American Tower, Realty Income has been increasing its dividend every year since it went public in 1994. In the last years, the dividend growth has slowed down, and as you can see, the recent increases are minimal. Those minor increases of 0.2% are just to remain the record of over 100 consecutive quarterly increases. In the last 5 years, the average dividend growth rate is 2.51%. This is definitely lower than the ones that I want to see, but Realty Income is one of the safest monthly dividend-paying companies in the world. This is the main reason why I love it and continue to invest in it. Given the most recent dividend payment, the dividend yield is 5.79%. which represents $3.08 per share annually. The 5-year average dividend yield is 4.37%, which suggests that the share price is undervalued. The analysts are also thinking like me and give the company a hold rating, with a 17.3% upside potential to $61.91 a share. They're projecting earnings per share to grow 4.74%, from $4.01 to $4.20 a share. Realty Income's insiders are not very active, maybe because they own only 0.1% of the company. In the last 3 years, they haven't bought any stock and only have sold 2 times. Most recently in the last year for just under $200,000. But institutional investors are compensating for this. In the last 3 years, every single quarter they have bought more shares than they have sold. This shows their confidence in the company's bright future. Personally, Realty Income is my favorite REIT stock, and it's the second largest position in my portfolio, surpassed only by Microsoft. The current dividend yield is one of the highest it has been in the past 5 years. Realty Income has consistently demonstrated that a dividend yield exceeding 5% represents an attractive entry point. The last REIT for today is Extra Space Storage. As its name suggests, the company is renting storage units. Extra Space Storage has over 2,000 locations across 41 US states, with approximately 1.5 million storage units. Its occupancy rate is 96.2%. This is the highest in the company's history. Extra Space Storage price is down 12% in the last year. But this is not that concerning because most of the REIT stocks are down in the last year because of the higher interest rates. With a market cap of $30.3 billion, this is the smallest REIT of all mentioned in this video. It has increased its dividend for 15 consecutive years and pays $6.48 in dividends annually, which represents a dividend yield of 4.52%. The 5-year average dividend yield is 3.34%, which is way lower than the yield at the moment. This is a good opportunity for us investors to buy a quality company at a discount and to receive more money in dividends. The company is growing its dividends at a rapid pace, some years even with more than 20%. This is why the 5-year average annual dividend growth rate is 13.65%, over 2 times higher than the 6% that I am aiming to achieve when investing in a company. Analysts give the company a moderate buy rating with an upside potential of 5.6%. If I was expecting the share price to go up with only 5.6%, I would never even consider investing in the company. I think that extra space storage has a long greater upside potential, but I'm nobody. But if you want to buy the company, before that do your own research. Analysts also give the earnings per share growth of 2.71%, from $8.30 to $8.35 a share. Like the other REITs mentioned above, and in this one, insiders are selling the stock. In the last 12 months, they have sold $7.54 million worth of shares, while buying only $500,000 worth of stock. Institutional investors have been heavily buying in the last 12 months. They have sold shares for $2.1 billion and bought $8.81 billion worth of stock. Out of the 3 companies I shared with you in this video, this is the only one I don't currently own, but I am thinking about buying it soon. REITs are a great source of income and I see a lot of growth potential for these 3 REITs. But if you want even faster growing dividends, watch this video for 2 dividend growth stocks that are trading now at discount prices.